What if I told you that just one simple candlestick chart pattern could transform your swing trading success? Imagine spotting a setup like this one, getting in early just as the pattern is forming, riding the wave, and then cashing out for massive gains once the stock actually breaks out. But here's the catch. Most traders miss these golden opportunities because they don't know where to find these chart patterns to trade, when to enter, or when to exit. And that's exactly what we're solving today. The market has been tough lately. With the S&P 500 entering correction territory, it has definitely been challenging for day traders and swing traders. While breakouts like these are no longer working, don't worry. If you're selective and know where to look, there's still opportunities in the market. In this video, I'm sharing the 3 most powerful chart patterns for swing trading. Exactly how to find them in real time and scan for these stocks, when to enter, and how to maximize your profit while minimizing risk. If you're serious about improving your swing trading game, then stick around till the very end. I'll also share my top scanner settings and criteria to help you find these setups. And it wouldn't cost you a cent. If you're ready to level up your swing trading game, then smash the like button and let's dive in. Okay, let's start with the swing trading chart patterns now, shall we? This is a highly debated topic, at least in day trading. You guys know me, I'm often quite skeptical about all these chart patterns you see on the internet that day traders memorize when they are used in intraday in day trading. But like I mentioned before in my various swing trading video lessons, when it comes to swing trading, I actually have seen a lot of examples of these candlestick chart patterns working out on the daily chart for the large cap stocks and again on the higher time frames. But again, I'm not saying they're going to work 100% of the time because nothing in trading is ever guaranteed. But I have seen these daily chart patterns for swing trading repeat and work out again and again in the past. Since you are swing trading and holding on to these positions for a longer period of time, the charts are a bit more forgiving, and you have more time to let the trade work out. In my previous masterclass on swing trading, I went over the 3 basic swing trading chart patterns. If you haven't seen that video, make sure to check it out after this one. But here's a quick review. The 3 fundamental chart patterns you need to know for swing trading are the breakout chart pattern, the breakdown pattern, and consolidation chart pattern. But okay, now you must be wondering, Shay, then why are you sharing even more chart patterns for us to learn today for swing trading? Okay, here's the thing. There is no strategy and no chart patterns that are guaranteed to work in all the market conditions. If you found the one though, then call me. Unfortunately, gap ups that hold and multi-day breakouts have been really scarce. I have barely found any good breakout swing trades since the last 2 months, and this is to be expected. That's why I've turned to scanning for chart patterns that work best in a bear market or just a downtrending market in general. Let me share that with you right now. Pattern number 1, the wedge breakout. So you can see on this example, over here, AU, this is a gold stock. You can see the breakout here, the stock had gapped up over the 33.52's resistance here. But before there, you see like a downtrend that's being retested once, twice, 3 times. That downtrend over here, once the stock breaks out, through that little wedge here, you can see the wedge squeeze tighter, and the stock finally reclaims over 8 EMA and breaks out. Yes, it is still technically a form of breakout chart, but you want to make sure that there's at least a retest of 1 to 3 weeks of downtrend, like the one over here on AU. Again, a breakout is when a stock breaks through a resistance, which you can see here around the 33.50s, but for a wedge breakout, it needs to break the downtrend and break out above that resistance. There's many names for this chart pattern number 1. Many people call this the triangle breakout, the rising wedge, or just a really simple downtrend break. Another really clear example here is ERJ. This is an energy stock, I believe. You can see over here on the daily chart, we have the 200 SMA, the 8 EMA again. These are the 2 indicators I use for swing trading on my daily chart. So you can see another wedge pattern forming here. A stock broke out and then you have this triangle pattern here, over here, as you can see. And once the stock retests that downtrend and breaks out, then boom, you break out above to new, I think it's 52-week highs. And same thing down here as well from maybe like last month, like a rising wedge over here, triangle, downtrend breakout. Once the stock reclaims over that ATMA, breaks out above that downtrend, then you have a nice breakout pattern. Again, the big difference between this wedge breakout pattern versus just a generic daily resistance breakout is that the wedge pattern often has, like you can see on the charts here, a couple of days of consolidation. A lot of these breakouts, if you have the time to consolidate, oftentimes the success rate is drastically higher versus like a one-day resistance breakout like this one. Okay, let's talk about the entries, exits, and stops for this chart pattern number 1, the wedge breakout. So with these kind of breakout patterns, even though it's clear in hindsight, if the candle is too extended, like this one, I actually don't like to get in on this kind of candles. I think that's a little bit of a chase, and the risk reward is not that good. I prefer what we saw earlier with ERJ. Is here. What we saw earlier, I prefer these kind of consolidation candles. You can see the stock is riding along that ATMA once again, forming that wedge pattern here. And once we have a candle one or two that have broken out above that daily downtrend, remember that downtrend has to have been retested for at least a couple of days to a week. And once we have an actual candle that broke out, riding above the ATMA and above that daily downtrend, and above that downtrend wedge breakout, then this is the kind of candle I like to get in for a swing trade. I share a lot of these swing trading and day trading charts patterns and ideas in my free weekend watch list. If you're interested in checking that out, you can sign up for free down below. The next chart pattern we'll talk about is the long-term downtrend break chart pattern. Okay, it sounds really similar to the previous wedge pattern, but it's not. Hear me out. Let me show you a couple of examples here. The first one is INTC Intel. You can see this stock, when I say long-term downtrend, I mean this stock has been a downtrend since the beginning of 2024. You can see the stock over here trending below, breaking down that 200 SMA, and then it traded for a while, broke out, never retested or reclaimed that, and then just a huge gap down and sell off again. So for these long-term downtrend breakout charts, you're looking for specifically the large cap stocks. This would not work on small caps below the 800 million market cap. Just don't, because those are dilutive. Those are not the kind of swing trading candidates to look at. So you're looking for these stocks that are trading below the 200 SMA, and now it's starting to ride above the ATMA. You can see that even though Intel was still below the 200 SMA for a while, it's starting to reclaim over that. You have a retest of breakout above that 200 SMA, pull back, and now you're attempting that again. So this is a kind of wave or kind of reverse of a trend that I'm trying to catch with a specific chart pattern. It would be even better if there's a catalyst for that, in which for Intel, it did. So I believe it's, I forgot it's this day or that day, they announced that a new CEO who's very experienced in the semiconductor industry is taking over. And for a company like Intel that's been trending downtrend for years and really beaten up, this is something transformative that can be really positive and transformative for the company. So that's why for the stock, with that catalyst in mind, if it's able to break through that 200 SMA, reclaim that ATMA breakout and break through that 200 SMA, we can see a huge reversal of that long-term downtrend. And we want to see a breakout to the upside. From here, $24 potentially to that, $28 and $30 or above. Let me show you another example here with CRSR, Corsair. So you can see another example of a long-term downtrending stock. The stock has been below that 200 SMA since late 2023. It's just being a downtrend. And over here, only at the beginning of 2025, then it's reclaiming that ATMA. Again, it needs to reclaim that and then trending up above towards that 200 SMA. You can see a nice 200 SMA breakout and the stock rallied up higher from this one around like $8.50 to $12. So this is a kind of long-term downtrend break chart that I'm looking for. In terms of the executions, entries, exit, and stop out is very similar to the previous pattern number 1, the wedge breakout. So again, you're still looking for that long-term downtrend to break around here to get in. Again, I want it to already be trending up towards that 200 SMA or even over that 200 SMA, just like what we saw for Intel. So for this example, I will get in right over that 200 SMA and 80 MA cross, also synchronized with the downtrend break, right along that 80 MA again for that breakout move. And then for this one, the stops I will put below the 200 SMA. I actually like this particular chart pattern more than the first one, the wedge breakout chart pattern. Because the good thing with this particular chart pattern versus the previous is that a lot of times the breakout and consolidation is often slow and steady. Like you're not seeing like a giant breakout candle like this one all the way here. So it gives you a little bit of time to build your position and to ride that wave slow and steady up. Versus what you saw earlier with the wedge breakout pattern, a lot of times the first day of the breakout, that's it, the stock shoots up and you miss your entry. Okay, let's talk about the next chart pattern for swing trading. But before we do so, here's a quick word from our sponsor for this video. The last couple of weeks have been tough for the market. All these talks about trade wars, recession, and potentially more inflation, these issues are not friendly to the market. And as a trader who's predominantly long biased, I'm not gonna lie, there were many days when I was just sitting here on my hands and watching this bloodbath in the market. One solution that has been helping me in this market is the use of inverse ETFs. Inverse ETFs, also known as bear ETFs, are instruments that profit from a decline in the value of an underlying asset and typically must only be used in the short term or on a daily basis. For example, on a major sell-off day like this one, instead of short selling the S&P 500 or individual stocks and incur the use of margin and its potential risks, I can go long on SPXD instead. As you can see here on this chart, SPXD is the inverse exposure to the S&P 500 index fund. So when the index is breaking down below that 200 SMA and selling off drastically, the SPXD chart on the other hand is breaking out of that 200 SMA and forming a nice uptrend and breaking out on the daily, mirroring the inverse of the S&P 500. The Beta Pro S&P 500 negative 2x daily bear ETF provides double the inverse exposure to the daily performance of the S&P 500 index. This is a tool to potentially profit from the declines in the US large cap stocks. So when the market is down 2%, SPXD should be up 4% on the day. It's a good option for traders who are mostly long biased, like myself, by mirroring the inverse movements of the index. Investors may also consider these bear ETFs to potentially hedge against market downturns. It's important to note that some experts advise caution due to factors like potential underperformance over a long period of time. Leverage ETFs can amplify index returns, enhancing daily gains, but also magnifying daily losses in downturns, and can incur rapid daily losses if trends reverse. So make sure you do your own research, assess your risk tolerance, and consult with professionals before using them in your strategy. You can check out the full list of Beta Pro ETFs, as well as the indices, commodities, and sectors they cover in the link down below. Now back to the video. Pattern number 3, the oversold chart pattern. This is the one in which I'm looking for potential reversals. I would say out of the 3 chart patterns that you're learning today, this one is a little bit harder to find, but the risk reward is really good when you do find them. Essentially, for this chart pattern number 3, the reversal chart pattern or oversold chart pattern, I'm looking for stocks that have experienced short-term selling pressure that's really drastic and big drops below the 200 SMA for the last couple of weeks or month. And I'm looking for signs that this stock is due for an eventual bounce. But the key here is that you must really understand the catalyst that caused the company's stock to sell off so drastically below the 200 SMA. And the catalyst must be something that the company or the stock can recover from, and that is short-term, not permanent. Okay, let me explain further with some examples here. So you can see this stock, Kava. You can see that this stock was on a tear for the entire 2024. It went from like 33 all the way to $160. But recently, in February, the stock had a huge sell-off from 130 all the way down, cracking that 200 SMA and below to 110, below 100, and now it's settling in at around $80. And another reason is that the stocks, the earnings report from for Q4 that was reported at the end of February just wasn't that impressive. So this is the kind of chart I like. Remember, 200 SMA breakdown here, the stock has sold off drastically. You can see this thing from 112 all the way down to $80. It barely even bounced until recently. Now what I'm looking for is when the stock was selling off, you can see it's selling off trending below the 8 EMA. I'm looking for the stock to reclaim over that 8 EMA once again, the momentum indicator I love using, and start consolidating. So you can see it's starting to break out here on Wednesday, March 19th, reclaiming over that 8 EMA, and this is the signal I'm looking for. So with this, once it starts reclaiming, where I want to get in is a reclaim of 8 EMA, and I will be risking below that. So, if you're conservative, I would risk all the way at $75, but I understand not everyone's comfortable with that. If you want to use tighter risk, then I'll risk just below, give it some room, like maybe $1 below the 8 EMA. And big picture wise, you're looking for a reversal, right? Because we talked about the sell-off is so drastic here, you're looking for a technical bounce towards that 200 SMA. But with this one, you definitely want to be cognizant of the recent resistance. So for this one, the first target I'll look at around $97, eventually around hundreds over here. Those are the daily resistance for Kava. So another example here, ACN, you can see the stock really sold off drastically from 380 down to 340. You had another gap down here with earnings catalyst, now it's great, all the way down to $300. Now for this one, it's not ready yet. You can see the stock has not reclaimed or caught up to the 8 EMA just yet. But again, like I often talk about for all the swing trades, almost all of them, a lot of times after you scan the stock, it doesn't mean it's actionable the day you find the potential. So for this chart setup, I will save this ticker in my watch list and just look at it every single day near close. And I'll see whether the stock is reclaiming that 8 EMA and whether it's setting up for my entry. Remember, you're not in the business of trying to pick the bottoms and then catch a falling knife. Who knows, this stock 305 can keep falling as well. Here are some more examples of this chart pattern. You can pause it on screen for a closer look of Adobe and CrowdStrike. And before we move on, if you're enjoying this comprehensive swing trading video lesson so far and you want to see more, please remember to hit the like button down below so more people who are interested in swing trading will see this video, and I really appreciate it. With the 3 swing trading chart patterns that you learned today, there are a lot of similarities. But remember, trading is very nuanced, and so is pattern recognition and your entries, exits, and take profit. Not all the breakout patterns are created equal. In a bull market, maybe, but in a tougher market environment that we've seen lately, this kind of breakout is very risky. While this kind of wedge consolidation and downtrend break has a much better risk reward and win rate. It's these nuances that can determine the success rate of these chart patterns for swing trading. Okay, now in the next section, we're gonna cover how to find these profitable chart patterns to swing trade, all for free. So the first step is just to go to finviz.com and go to the screener section over here. This screener, the free version, is perfect for scanning for swing trading charts. Since the market data is delayed by 15 minutes, it's not good for day trading. I wouldn't recommend using delayed data for day trading. But for swing trading, that's perfectly fine. I use this all the time on the weekends. So let's talk about the criteria I'll use. And this is a very simple criteria. You can use the same settings for any scanner you use, whether it's a free version or paid. So market cap, I always scan for stocks that are above 2 billion. I do not like to swing trade small cap stocks. Price definitely over $1 per share. And now you can see there's 96 pages of results. That's way too many. Again, we need to narrow this down. So average volume, I'm looking for at least minimum 750,000 volume. For day trading, that wouldn't be enough, but for swing trading, that's totally fine. So I'm looking at over 750K. You can see that narrows down all the results drastically. Now, current volume, I'm looking for over 1 million on the day. And then the most important one is relative volume. This is the one you can play with. I'm looking for relative volume of anywhere between 1.5, or I'll try 2, or sometimes when there's a lot going on, I'll try 3. So you can see, I'll try any of this range. For now, let's try over 2. So remember, relative volume just shows you the current volume of the stock compared to the average over the last 3 months. So if you hover over relative volume here, it's a good indicator to use for momentum. So you can see that this is still a lot of results. So you can play around and even do over 3 if you would like. So and once we're here, you can see the tabs over here, this overview valuation. The really useful ones I like to use when I'm screening for swing trading charts is the charts one. You can see if I click it, it'll show me like a quick preview of all the results of the charts. So you can use the charts, you can see it gives you like a really cool snapshot of the daily chart on the stock and some of the basic indicators. But the one I actually use 200 SMA. But the one I like more is TA. Essentially, it's technical analysis. If you click TA, it will also show you the RSI, some of the indicators on the side. It will show you the daily SMA, how much is like 10% off the below the daily SMA. It will show you year to date, some of the relative volume, 52-week high range. So this is the one I like to use the most when I'm screening for potential tickers. And this is how I found some of the tickers earlier for the 3 chart patterns that you learned today. So let's take a look at these chart patterns one by one, and I'll tell you how I analyze them and whether they fit the 3 patterns we learned earlier. So ACN, you already saw, this is the oversold reversal pattern that we're looking at. You can see the indicators over here. Again, the one that I will actually only use is a 200 SMA here. ADM, this one is in a long-term downtrend. So, this also don't show any signs of reversal, so I wouldn't pick this one. This one, ADMA, you can see this one is considered, also like a wedge breakout here. So let's take a look on the bigger charts here, ADMA. So you can see on the chart over here, this one actually have a long-term downtrend break here. You can see the triangle breakout downtrend break, and the stock is reclaiming over that ATMA. So this one would actually fit the pattern for pattern number 1, the wedge breakout. ADT, I don't see anything there. It's riding the uptrend, but I don't really see any really obvious long-term downtrend break. This one, I think this one, AESI, oil stock here, this one will actually fit the oversold chart pattern. If you take a look at it over here, the RSI is also below 40. It's relatively low. RSI stands for Relative Strength Index. When the number is low, usually around 20 or 30, it shows you that the stock is, generally speaking, oversold. But again, obviously you need to put it up on the actual charts here and take a look at it. So AESI, you can see the stock is way below the 200 SMA. Looks like it's also earnings miss here. You can see the E sign here. You can see it's reclaiming over the orange line, which is the 8 EMA. So this one is also worth taking a look at. You can see this one is what I would call a daily breakout chart that we learned from the previous swing trading masterclass video. You can see a huge daily range resistance breakout. This line here around $79, and the stock is breaking above it. But in this market environment, this would not be the kind of chart pattern I would want to swing trade. ALK, this one's an airline stock, so I would personally stay away from tech, airlines, all these really sensitive to current market environment. So you can see there's actually a lot of potential results. But let me just show you this one in a downtrend. I would not like this one. This one, oil and gas, it's been doing well. AM, you can see it's been uptrending. This one, you can see that it's kind of a triangle breakout over here. You can see that's a good thing with Finviz. It kind of shows you some basic technical analysis chart pattern. So this one is a rising wedge breakout as well. AM. Nothing here. This is not a long-term downtrend at all. In fact, this AMKR is the kind of chart you want to avoid. There's no breakouts at all. It's not making higher lows. This is one probably gonna continue fading lower. So using this very simple scanner with all the free settings that you saw earlier, it's how I found some of the chart patterns that you saw earlier in the video. Remember, with these criteria that you see on screen, you can pretty much use it for any scanner that you're using, free or paid. Or if you have questions regarding the chart analysis process we just did, analyzing the scan results one by one, then you can ask me in the comment section below. I'll do my best to answer them. I have even more swing trading resources below in the video description, more in-depth free masterclass, the brokers and charting platforms that I would recommend for swing trading. Everything is down below. Coming up next, in this video over here, I share my favorite swing trading strategies with you step by step, and I'll see you over there.